Is there anything more frustrating than losing money on the stock market? I mean, you work very hard, you make sacrifices, and instead of going on vacation, you save that money, you invested it, and then you open your brokerage account and you realize that the last 10K you put in the market is down to 7. And now you're stuck. You're just thinking, should I hold those shares or should I sell them? And this is exactly what happened to Tom, one of the DSR member last week. He sent me an email asking, Mike, I'm holding shares of Bank OZK. I'm losing a great deal on them. Now, what do I do? So today, we're answering Tom's question, but we're answering a broader question, answering, should you hold or sell when you're losing money? Let's do this. Dividend investors, bonjour. This is Mike Roux, founder of Dividend Stocks Rock and passionate investor. Today we're talking about fear, we're talking about doubts, we're talking about whether you should sell or not. You're losing, guys, in your portfolio. And then first I have to say, Tom, I feel for you because I also have a few shares of Bank OZK in my portfolio. And at one point in time, I was making money, so I thought, oh man, I'm doing well, it's doing great, and it's all fun. And obviously, as you do, I opened my brokerage account a few weeks ago, and now I'm losing money. The stock is down. And today we're not going to talk about OZK, but we're going to talk about how to analyze, how to get back to those companies that you once decided they were worth enough your time and your money to get in your portfolio, and then all of a sudden they're kind of like laughing at you because they're making you losing money. So the first thing that I would have to say here is never watch the market, never listen to it. The market is just a bunch of noise. And the problem when you look at the market and when you keep tracking your investment is you're going to see shares price going up and down for absolutely no reason. So first thing, don't look at the market. And what you should do instead is look at the company's quarterly earnings. Each quarter, I religiously pull out all the quarterly earnings, read the press release, look at the investor presentation, and make sure I understand what's going on in the business. Now, this sounds a bit complicated, a bit long, but most of the time it's only a couple of hours because you already know what the company is about. But what the most important thing is, you understand where the company is going. You understand what's happening. If there's any important news, you'll know, and then you'll be able to understand why shares are going down or not. So that was number one. Don't look at the market, look at quarterly earnings. Now, the second step that you should do is go back in time. Just go back to the time where you purchased those shares. Look at your investment thesis. Now your investment thesis is pretty much all the good reason why you decided to buy those stocks in the first place. Maybe you like the business model. Maybe you found some great growth vectors and you're going to think, oh, this company is going to thrive in the future because of a new acquisition, because they dominate their market, because they show great fundamentals. So it's looking back also to the metrics. And you already know that I really love the dividend triangle, which is revenue growth, earning growth, and dividend growth. So if all of this is there and you made your homework and you know about potential threats, which are there, but they're not affecting the business so much, then you have a better understanding on what's going on with the company. So you have to ask yourself, is my investment thesis today is still good compared to what's happening in the past couple of quarters? Is the company's going towards the direction I thought it was? And don't freak out for one bad quarter of revenue or earnings. Look a little bit deeper, look into the explanation and try to understand what is happening there. So let's go back to my screen and take a look at a real example. And just for you, Tom, we'll take a look at Bank OZK. So now we're back on our website, dividendstocksrock.com. So let's take a look at Bank of OZK. We're just gonna select the US card and go right here, use the search, OZK, there you go, click on it. And as I mentioned before, in a few months, we're gonna have all those stock cards into web pages. But in the meantime, we still have very nice looking PDF format. So basically, I'm going to skip the business model because you should all know what Bank OZK is about. But what is important here is we're going to look at the investment thesis. Now, let me pull out the screen a little bit bigger for you. So here's the investment thesis. The small bank that sees big has a strong reputation in the savings and loan banking industries. As a classic one, OZK is well positioned to benefit from the US economic tailwind. I trust the man behind the bank. George Gleason II has been the chairman of the board, chief executive officer, and president of OZK since 1979. That tells you a lot about management strength, right? He's the beautiful mind behind the growth story, and I don't think it will end today. Finally, its real estate specialties group is a loan growth machine. OZK is leaving the crowded loan activities to focus on real estate specialties. As the construction industry is healthy, our RESJ should have solid results going forward. So basically the story behind Bank of OZK, it's a regional bank that grew through acquisition, that's doing well, and then they found their main growth vector. They're talking about like financing condos and parking lots and important projects in New York City mostly. And this is where the whole fear is about, is the market going to collapse and then create lots of problems. But when you think about it, when you look at the quarterly report, this validates the current investment thesis. And if you look at the past information right here, so revenue, earnings, and dividend, you can see that the dividend triangle is very strong, very healthy. So the business is just doing well. Exactly what I wrote in my investment thesis. So as you can see, I'm going to be holding my shares of OZK for a while now, and I don't think that there's any problem with the company. So now, why the stock is going down? This leads to number 3. So the third things you have to look at is to put the stock into a broader context. Look at all the headlines around the company. Is there anything happening? Is there acquisition or like major headwinds like currency headwinds or tariffs or anything that could put you in context and explain why stocks are going down? The second thing you have to look into that is the sector. Like if the whole market is bearish around regional banks, well, obviously, if your bank is just doing okay, it will get hit by the storm and shares are going to go down, but not because it's a bad investment, not because you didn't do your investment thesis right, only because the market doesn't like regional banks at this point. So this is something that you have to be careful about to put everything into context to explain what's happening. So bearish market, bearish sector will tell you a great deal about the company. So from time to time, unfortunately, you will have missed something and the company is going down because bad news are happening and something that is really bad happening to the company. And at this point, what you have to do is to consider if your investment thesis is still good or not. If it's good, keep the stock. If it's not, or something has changed, you might want to get rid of it right now and cash your lot. By looking at the context, by looking at your investment thesis, it will help you define what is the problem. And by defining the problem, by understanding where the shares are getting hurt, then you'll be able to take a wise decision, either holding your company or sell it. If you want to sell it, just don't do it because you're down 30%. I've been holding shares of stocks for several months, sometimes years, before making money. Like a great example, Starbucks. I bought Starbucks in 2017 thinking it was a great company. Like I said, great investment thesis, dominating their market, growing through China, strong fundamentals, and most importantly, very strong dividend growth perspective. Well, what happened is between 2017 and 2018, pretty much nothing happened. And then a few bad news came in. Luckin Coffee were taking over into China. There were like problems in Starbucks stores, slow growth in the US, and then the stock started to go down. So right now, 15 months later, I was just down maybe 10, 15% on my investment. And all of a sudden, things turned quickly. And now the company's growing, and now the fears disappeared. And from like 1 month to another, Starbucks started to surge. And one day I realized I was up like 65%. So don't quit on your good investment. It's not because the stock market decided that you were losing money today that you're going to lose money forever. Always look back at your investment thesis, put that stock into context, and define if the current situation is a sign of something going bad at the business, or is just the market creating more noise and getting on your nerve. So if it's the latter, keep holding your shares. But if there's a real problem, now it's time to be dreadful. Just pull out the plug, take your loss like a man, and move on. And I'll end this video with my personal trick to make sure that I make wise decisions is to have a watch list. The watch list is quite simple. It's basically companies that I found throughout my research that I'm very interested in, that I found exciting, that I love the business model, I love the dividend growth, I love the dividend triangle, but unfortunately, I don't have any cash left to buy them. So I put them on the watch list and wait. And whenever one of my holdings are doing something wrong and not meeting my investment thesis, well, I just pull out the plug, look back to my watch list, and pick some replacement stocks. Now, as an example, just click on the link below, download my DSR Pro report. You'll have a portion of my personal portfolio with all the ratings on my stocks and my potential buy list. So it will give you an idea of how to build your own and how to follow your portfolio on a quarterly basis. Because remember, once you put the stock into a context and once you verify your investment thesis, you should know by now when you should hold those stocks and keep waiting and just ignore the noise on the market, or if you should sell them and move on. So until the next video, stay invested.